Good morning, everyone. You are watching live daily market outlook for Friday, 26th of June 2012, prepared by Windsor Brokers as the one of the number one safe haven instruments. US dollar is continuing to rally higher with its counterparts, euro, sterling, yen, and the Swiss franc, along with the commodities being pushed lower. The situation in the markets seems to be accelerating again. The prices are spiraling on euro dollar and sterling dollar, as well as crude oil, that is again our top performer after losing some very significant levels, currently trading below $78 per barrel, and gold also breaking below its significant support at $1,600. It seems that today's day is going to be quite busy, and the situation in the markets quite active at the end of this week. The highlights of the day come as follows. The four big from Europe are meeting today in Rome. The leaders of Germany, France, Italy, and Spain will try to find a common ground on their today's meeting to restore confidence in the Eurozone ahead of full EU summit next week, which Italy's Prime Minister called a defining moment. Dangerously high borrowing costs for Spain and Italy have eased a little on market hopes for policy initiatives at the Brussels summits in June 28th and 29th. If it falls short, both countries may be pushed closer to eventually needing sovereign bailouts. Some comments from yesterday from Spain, and now seeing again the different amounts required, as initial request was seen around 80 billion euros to cover the Spanish banks. Now the amounts going from 15 to 30, and in the larger picture up to 60 billion euros required to cover indebted Spanish banks. As said, without a successful summit, there will be progressively greater speculative attacks on individual countries, with the harassment of their weakened countries. Italy's Prime Minister Monti said in an interview carried in a number of European newspapers ahead of today's mini summit, at which German Chancellor Angela Merkel is likely to be outnumbered. A large part of Europe would find itself having to continue to put up with very high interest rates that would then impact on the states and also indirectly on firms. This is the direct opposite of what is needed for economic growth of the Eurozone, Monti said in his interview. We'll see today's outcome of the mini summit in Rome. Meantime, also important news that come from Moody's, who downgraded 15 of the world's biggest banks yesterday, lowering credit ratings by 1 to 3 notches to reflect the risk of losses they face from volatile capital markets activities. But banks criticized the move as backward-looking. Morgan Stanley, one of the most closely watched firms in the much anticipated review, had its long-term debt rating lowered by just 2 notches, one level less than had been expected, sending its stock up sharply in after-hours trading. The downgrade left Morgan Stanley more highly rated than Bank of America and Citigroup, but a step below Goldman Sachs Group. Credit Suisse, which last week was warned about weak capital levels by Switzerland's central bank, was the only bank in the group to suffer a 3-notch downgrade, but its new A1 deposit and senior debt ratings still rank higher than many of its peers. That was a brief outlook of today's news and the fundamentals. We're going to take a look now at the calendar that is not very big. The important releases are from Germany, that is IFO business climate, current conditions and expectations, that are all expected to come lower than the previous releases. June forecasts are as follows: 105.9 for business climate, 112.3 for current conditions, and 99.8 for expectations. versus 106.9, 113.3, and 109 respectively on the previous May's release. And from Canada, CPI for May, briefly lower expectations from the previous release, 0.2 on the monthly, and the core CPI at 0.3 versus 0.4 of the previous. Not to delay further, we're going to take a look at the markets and see the current situation and the outlook for today, starting with our again top performer, crude oil, that extended its medium-term weakness of 106.41 1st of May peak, and a broader 110.53 1st of March 2012 yearly peak, after losing a very significant support at 81.10.20 zone, where there was a brief attempt to build the base, with upside being capped at 87 zone, and a fresh slide through our next downside target at 80.00. So far extended losses to 77.54, en route obviously towards our next targets at 75.70 and 74.94, lows of August and October 2011. It was also significant that the price broke below 79, pardon, 00. That is a longer term ascending bull trend line of 75.70. Low through 74.94, low of 2011. So from a low of 2010 and low through low of 2011, the trend line support has now been lost, and the oil price continues to spiral lower, with the levels at previously mentioned 75.70 and 74.94 being in the short-term focus. Negative tone that dominates on the all time frames keeps the downside absolutely favored at this point. However, quite extended conditions on the on hourly chart see some potential of at least consolidative action, while anything more serious would be seen only on a break above initial and strong barrier at 81.10.20 zone that will provide a near-term relief and possibly allow for a stronger reversal. Otherwise, any other action higher would be just seen as consolidative and a brief correction, as the crude oil price holds a strong bearish tone, and the targets seen at 75, 70, and 74 and 94 in the days to come, as current acceleration of pace of the descent of the oil price sees it in the quite short term of time. To avoid immediate downside risk and signal some stronger basing attempt, we need to see the break of minimum 87.00. That's the previous consolidation range top. That will allow for some stronger recovery. Until then, the downside remains firmly in focus. A similar situation is with the gold, that is has again lost ground on its recovery attempt of 15.32 low of 30th of May, as the yellow metals price action ran out of steam at 16.33 on approach to our next significant barrier at 16.40, and the sharp slide through mainly Fibonacci supports with some static levels at 16.00 as previous low, and a strong psychological support that also marks 38.2% retracement of the entire move from 15.32 to 16.40. Accelerated losses with the last break of 15.73, 61.8% retracement so far, extending to 15.59 ahead of the spike low 15.55 of 8th of June. Negative structure seen on 1 and 4 hour charts, with the signals of possible corrective reversal seen on the hourly, as RSI is now moving above the oversold territory, and MACD started pointing higher from its extremely extended position after hitting fresh lows. That might be signal for some brief corrective action, as long as 1600 as now acting as initial resistance holds the downside. Any stronger move higher would be seen just as a corrective, and the lower top seen under 1600 there for fresh slide lower, and a possible revisit of critical support zone at 1520.30 and 1500, break of which will follow so far several unsuccessful attempts. The first one was in September 2011, then December 2011, and the recent ones in May and June, where this level held the downside along with the ascending 90 days moving average that is currently at 1535. A break below these levels would be trigger for a stronger reversal of 10 years uptrend of yellow metal that started from approximately $300 and ended up in $1,920 in September 2011. As mentioned yesterday in our update, the live session, and as well as in the written analysis in the afternoon, the high risk of further slide of euro after unsuccessful attempt to regain and break above 127.45 previous high have materialized after the pair lost its initial supports 126.36, 126.15 and 126.00, also accelerating losses after a break below the main bull trend line at 125.90, with initial dips in late afternoon to 125.30, where the brief consolidative action took part, with the 125.63 being the capping the upside action, where is also the descending 20 days exponential moving average. This morning's fresh slide dipped even lower to 125.18, just ahead of 125.16, 50% retracement of the up move from 122.87 to 127.45. That was basically our next downside target, with the further extension lower as studies remain negative, and the 4-hour once broke below the midlines. However, hourly situation in hourly studies seems to be a bit overextended, and the possibility of some corrective action, further corrective action is seen. But overall, negative tone sees the scope for further extension lower, with the next significant supports on break below 125.16 and 125 as round figure support towards 124.62, a 61.8% retracement, and the higher base at 124.40 zone that is seen as a strong support. For now, the break below 125.57 previous low has confirmed the double top pattern on the near-term charts, and now the creation of this pattern, as well as break below the descending trend line connecting 128.82 and 126.67 tops might be signal for a further weakness of the single currency against the US dollar. Cable also extended its pullback of 157.76 2 days ago, low up peak posted on 20th of June, after break below some significant supports at 156.50, 156.15 and 156.00, has extended the losses so far to 38.2% retracement of the entire move from 152.67 to 157.76, hitting low at 155.76. That's also the previous top of the 11th of June 2012. As the studies on the hourly chart are firmly negative, with the corrective, brief corrective overnight action seen capped so far by 20 days moving average, but started to point higher. We might see some basing attempt and corrective action as long as 156.00 from 156.50 zone stays intact. Likely scenario would be a further extension lower, with the 21 50% retracement, and more significant Also the 155.21, pardon, 155.00 figure support, and the more significant 154.60 zone, the higher platform, and the 61.8% retracement would be seen as the next targets. Only break above 156.50 would be signal for a higher low at current low at 155.76, and will bring short-term bulls back in play. The dollar yen continues to travel higher after a break above some important barriers, first at 79.80 and then 80.00, so far extended gains to 80.51, approaching our next upside target at 80.60 as the hourly studies reached overbought territory and signaled some corrective action that is materializing now with the dip lower so far seen at 80.28. I would say that any correction lower should be contained by 80.00 and 79.80 in order to keep the recent strong bullish tone in play for possible further extension higher, as 4-hour chart studies are quite positive, but some signals of corrective action seen so far. A loss of 80.00, 79.80 would delay, but still 79 dynamic supports at 79.60 and 79.40 seen on F20 and the 55 days exponential moving averages that are still pointing higher are seen also as a good support, while only loss of trendline support at around 79 zone would be risky. That will turn the focus lower again towards 78.80 and 78.60, where is also the 200 days moving average that so far held the downside protected. Some improvement and regain of bullish momentum seen on the daily chart after the pairs price broke above 79.80, 80.00, where is also 55 days exponential, 55 days simple moving average, with the 80.60 and 80.71 90 days moving average seen as the next upside targets. And finally, the dollar Swiss, that is also traveling higher after a strong bounce of support zone at 90.20, extended gains through descending bear trend line at 95.30, and clearing our initial target on the upside and the strong barrier at 95.62, with the further extension higher now seen likely as the pair broke above 95.62, approaching 96.00 as the next significant barrier round figure resistance, and a 50% retracement of the down move from 97.69 to 94.20. This prevents the current price action of further slide and signals double bottom, near-term double bottom pattern for possible further extension higher. And 96, break above 96 to focus 96. 36, 61.8% retracement, and the strong barriers at 96.56 and 96.75. On the downside, previous resistance at 95.62 now acts as initial support, while only break below 95.00 would soften the tone again and keep the upside intact. That was all for today, Friday, 22nd of June 2012. Thank you for attending our live sessions. We're back on Monday at the same time at 7:00 GMT. Until then, we wish you a nice day and a nice and relaxing weekend. Good luck.